Welcome back to today's section. Today we are going to be talking about our Fibonacci tool and how we can personally use it on our chart to improve how we get our trade entry and how we spot our liquidity, just using the tools the right way in the market so that you can be able to predict the market the right way and trade the right way. The Fibonacci tool is simply by the side of your tools right there, just like you can see every other tools by the side. You can see the Fibonacci tool. When you click those tools like this, you can use this after the horizontal set of tools. You can take the one below it that have this 1 2 3 the four dots. You can just click the arrow by the side. You're going to see all the tools pop up like this. And which tools are we really interested in? This board right here, we're using this for this Fibonacci retracement tool right here, which is the tool that we're going to be focusing on today, on how to personally use it on your trading view. And if you can see, I've been backtesting on Ethereum lower time frame. Like, I've been backtesting on it because new week is by the side, and you really want to study every week to make sure that once the new week comes, you are really prepared to execute, right? So straight, let's use the 5 minute because we're going to be using Ethereum as the breakdown, and we're going to use Ethereum as the whole example of all of these things. And for us to use this, I've already studied this movement right there that you see me mark out on all my trading view. Like this, you can see right here, this you can see I've already marked them out already on my trading view. And I think we should redo this, or I should just typically leave it and just use the Fibonacci tool so you can see the exact thing what we're using Fibonacci tool to do right there and not get you much confused right there, right? So straight up, first thing first, you really want to get the Fibonacci setting. Now when you add the Fibonacci tool to your tools right there, it's going to up just like, let me remove it. And if I add it, you can see that it just pop up on my tools that is being showing on my trading view. If I have to take out this arrow right there so it doesn't keep showing all those tools that I don't need, you can see that the main tools that I'm using here is this, and you can see the Fibonacci right there. First thing first, you really want to get the Fibonacci setting, which is, I'm going to give you the Fibonacci setting. Just stay tuned and watch what we're carefully going to do right there. And you can see I only have this theory zone, I have the 100% zone, the 50%, and the 0% zone. And how do I simply use this thing is, I'm using this 50%. So within this 10 to 50% is called the premium zone, and this 50 to 0 is called the discount zone, meaning that anything within this zone we really want to like buy, and anything above this zone we really want to sell. But that doesn't mean you just have to just mark out this Fibonacci like this and you're expecting to sell or buy in anything within it. We use the Fibonacci tool in two ways. First thing first, we want to identify the supply and demand zone. We want to identify the supply and demand zone, which is the premium and discount zone. Like here is the premium zone, here, like I mean, is the premium zone, and this down here is the discount zone, right? So if this is the premium zone, this is the discount zone. On the higher time frame, if you're using a Fibonacci, you really want to identify the premium zone so that anything you are looking within this premium zone you are trying to sell. This is using the higher time frame to use the Fibonacci tool, and anything on the higher time frame within this discount zone you really want to buy, right? So now you already know how to check this on the premium and discount zone, and I will go straight to the chart so that you can see how you can use that on the higher time frame to know your premium and discount zone. An example clear here is, now let's use this. Now you can see that on the daily time frame, this was the last low. The market haven't really breaked from here, right? Market is still respecting this low right there, and market is currently within the zone, right? Meaning the market is still trading from this low, and this high as well is the last high where market stopped. And this high that market stopped really took out this high right there, right? And as well this high, meaning that market is kind of And if you take the trend of the market is kind of higher highs, higher low, higher highs, higher low, and this is higher time frame, right? And using your Fibonacci on this higher time frame, you just want to like, sorry guys, use your Fibonacci from the last low to the last high, just like this. And when you have the higher time frame, the last low to the last high like this now, what you have here is the premium zone, which is where you're typically looking for only sales, and here is the discount zone where you only look for buys, right? So now we have this discount zone, and market is currently within this discount zone. What do we have to do? We have to look for buys within this discount zone, and you can see now. Let's go deep into the there. Remember, from this 50 to this 100 is the discount zone, right? We're trying to look for sell within all these down right there now, right? So now the first thing you want to like know where market is coming from. Like if this was the last drop, you really want to know where the market stopped and start reversing. That is a POI you really want to make sure you understand. And when you get that, you really want to have your a trade entry that you really want to catch your trade from. And now this is the second way to use the Fibonacci level. This is the most important part of using your Fibonacci level whenever you are trading. Now we just use the daily time frame to identify our premium and discount zone, and now we have to go to the lower time frame and use this more better to spot your liquidity so that you don't get to jump into a trade that is not aligned with the Fibonacci. And if you're taking a trade that doesn't align with the Fibonacci, you end up taking more losses than someone who used the Fibonacci, because with the Fibonacci tool, you always want to make sure you spot that liquidity sitting on your Fibonacci tool very correctly, right? So now a straight chart example. Let's use the 5 minute, because I've been backtesting on 5 minutes on Ethereum lately, and seriously guys, this guy do crazy numbers with this lower time frame. And a quick example was right there. This was two example in this point. I remember very clearly because on Friday night I saw Thursday/Friday night, I saw a buy from Ethereum within this zone. I didn't take the trade because I was literally waiting for money to come, because I was already on two trade with my community. We took two trade with my community, and let me go straight to show you guys. We've been holding these two trades since last week, so I didn't bother to take more trade. You can see GBP NZD and NZD CHF. You can take the link on my bio to join my Telegram channel, where I drop more updates on the trade that I take and how I execute my trade. Right now, you can see this zone right there. Now, straight to what we're talking about. You can see this zone right there. Now, what you have to do is just use your Fibonacci from the low to the high right there. If you use your like the last low to the last side, I mean the swing low and high where you're trying to look for your buy from. You know, the market is overall doing what it's doing, but when you want to trade, you always want to find the recent swing high and swing low for you to decide what you have to do in the market, right? Anytime, any pair, you always want to make sure you trading with the current swing high and swing low. And this swing high and swing low that I use right there now, you can see that the market tapped this point right there and started buying and took out this high that I currently marked that as my high when using this Fibonacci, and it took it out with a full body, giving you that direction that okay, market took out the high with a full body, giving you that direction that okay, more confident that market took out this high, we should continue more buying if market is on an uptrend. And you can see that my POI was right there, this algo right there, and you can see that market came in and tap in and buy from there. And before market came in and buy from there, I didn't just mark it just like that. You can see that I also use my Fibonacci, and you can see there was another low before this my POI down here. You can see that there was another low within this zone, this current low. Like let me take out this Fibonacci first, so you guys can see this low right here now was also in the before this POI, right? Before me using my Fibonacci, now I viewed from the low, the current low of my swing that I really want to trade off from. I'm fibbing from the low to the high that market took out with a full body, and you can see that my liquidity is currently sitting at a bit below the 50%. And what is the rule about Fibonacci when it comes to your liquidity spotting? First thing first is I think I don't have my test here, so I need to get the test there. First thing you want to take look out for when you are using your Fibonacci on your liquidity. First thing, let me use this like F Fibonacci Fibonacci tool. Yeah, let me just put it that way. Fibonacci tool. Then we talk about how to use it on a liquidity. Then now we're talking about how to spot it on your liquidity, right? So that you make sure that you're trading with the right liquidity. First thing is your Fibonacci, sorry guys, I think this will take you more. Your Fibonacci need to be on this 50%, slightly below it or above it a bit. Like your liquidity should be below this 50% a bit, or at the 50% or a bit above it, like something like this. If your Fibonacci is within this 50%, you are likely to your liquidity is correct and you should take your trade. And this is one example, and let me show you guys the other example as well. Look at this guy right there. Exactly. Look at this guy as well. You can see the market was currently buying from this algo, and this high was being taken out with the full body. And if you use your Fibonacci like from this low to this high, again you can see that your Fibonacci is your liquidity is currently ranging within the 50% of the Fibonacci level, right? That is how you use your Fibonacci to make sure you're getting that liquidity to correct. What are the two things that I mentioned about Fibonacci? First thing about Fibonacci is spot spotting spotting premium and discount zone. The premium and discount zone. That is the first thing you want to use your Fibonacci to do, which is one. And the second is the liquidity zone. Liquidity your liquidity zone. And what is the rule that guides in using the Fibonacci on the liquidity zone? Liquidity must be on top of the 50% fib level, slightly below it, and above it a little. Now, these are the rules that guide in use your Fibonacci. You can see the first Fibonacci to that we said the way to use it is supporting your premium and discount zone, and the other is your liquidity zone. You want to make sure that your liquidity is sitting on top of the 50% of the Fibonacci level, or below it a little, or above it a little. Take note of these things, guys, because this is really how you can use your Fibonacci the correct way and get a good trade. And you can see that we got a first example here, and this is a second example. And let's go for the third example, guys. Look, to be honest, I didn't mark out this zone because I won't cut a trade from here, but I'm going to be able to cut a trade like this, and I saw cut a trade like this because of where these two prices coming from. But this guy, based off where he's coming from, I don't really understand this, so I'm not going to use this as an example. Even as the fact that market bought from here And if we use our Fibonacci just like this, from here to this high, right there, you can see that the 50% Fibonacci is sitting at the 50% of the liquidity sitting at 50% Fibonacci level, and you saw the market just came down but from this algo. And I remember I said I'm not going to be using this zone as an example, but I just show you what Fibonacci can do there. Just you can see. Then let's move straight to a chart that a clear example of the kind of trade that I'm going to take and how Fibonacci as well gave its reaction right there. Okay, let's keep scrolling. This is the 5 minutes, so let's keep going. I'm going to get one there. I think we have one. Did this took out this low? Exactly. This is another example. You can see that prices coming from this algo right there. It took out this low. If we zoom in, we're going to see the market took out this low from here, and after taking it out, you can see the market came down. This is an algo right there. Yeah, this is an algo right there. Did market take out this high? Nope, but here, right? So if we use our Fibonacci from this low to this high right there, you can see this liquidity. You can see that this liquidity right there is very close to the 50%. Give you a good example to use this as another example, and if we take more, you're going to keep seeing more like that. And let's use another pair. Which pair should we use? GBP GBP let's see. Let's go to the 4 hour time frame. uh this sell not still yet what I want to take, but I just want the week to start because I'm currently on a sell from above here, and this market is kind of retracing this crazy way. Let's see how it goes. I think this sell that I marked out here, I call this sell, and let me show you this liquidity as well. This one was so deep in, the liquidity was so deep in, but exactly, you can see this liquidity was so deep in, but I called the trade because I already understand the direction of markets. You can see that the liquidity was probably inside after the 50%. You can see where the liquidity almost get to, but still the sell happened, and I took my 2 arrow and I exited the market, right? Fibonacci is always a tool that you really want to have on your tools that you check on, so that you make sure you're trading from a premium and discount zone as well, the same way you're using it for your liquidity and spotting the right liquidity, so you don't end up in a bad trade, right? I've been trading GBP to not too often these days because a lot have been happening on Bitcoin and Ethereum, most especially Ethereum. I love this Ethereum a lot, and there's a trade we also took with their 40 with my people, and this was how we came up with the trade. The trade was coming from a zone like here, and you can see if market was coming from here, we should have this algo right there. The market just came in to tap in from here. Exactly, right? And if you use your Fibonacci from this high to this low, you can see this 50%. You can see that your liquidity is currently on this 50%, giving you that spot that okay, your liquidity is here, is very good, and is okay to use as your entry level if you have this liquidity and your algo is right there. And remember, just using your Fibonacci doesn't guarantee you having, once you have a Fibonacci that gives you a liquidity on the 50%, that you should execute immediately. No, that way you're going to lose a lot of money. You need to understand where market is coming from. Just like you see me mark out this their 40, and I took this trade with my community. You can see that first of all, make sure I identify where market is currently coming from for it to, sorry guys, for it to start forming this that is forming here. So anything that happened, you can see the market took out this guy with a full body 4 hour candle, and you can see our Fibonacci sitting very nice, and the liquidity at the 50%. Look the way I draw my Fibonacci. I was drawing from the high to the low, the current swing high and the swing low, where market just reacted from, like market reacted from here, sorry, market reacted from here and came in here and create a total new thing, which is currently this low being taken out and this high being protected, and this algo right there to be our markout for us to sell from there. And you can see, right, that is exactly how market sold from there. And another example, let's use a UK 100. Is UK 100 here? I think UK 100 should be here. Exactly. Let's use this AUD as well. I think we also took this AUD sell. Look at this Fibonacci. If you flip from this high to this low right there, you can see your liquidity is at the 50% of the Fibonacci level, right? Just like that, you can use your liquidity very correct. And look at this current trade that we have in. Look at this current trade that is forming right there. If you flip from this low to this high, you can see it's still at the 50%. It doesn't matter even if you draw to this point, you're just going to be so much below 0.5, but it's still very correct. You can see from this side to this low to give you that, and from here to here to give you that. It's so deep in, and I showed you same thing on GPW that was so deep in, and the cell was still correct. Just like, let me show you, let me go straight there, and so you can see the example clearly again. uh where is your guy? Should be around here. Exactly. We drew this liquidity and we saw that it was so deep into the after the 50%, but still very correct to execute just like that. And we execute and made out some money from there, and exactly same thing that is forming on AUD USD. So I'm active and watching out for this trade as well. Do you need more example? Let's see. Of course, there are much more example on the chart. There are so much more example on the chart. Are we? No. We're not on GP. NAS. I really love this NAS a lot. Like, I've been getting a good trade on NAS and S&P recently, and let's use S&P as an example because S&P and NAS, they're kind of like Bitcoin and Ethereum, but I didn't say they are just like that because last week, yeah, I was having a buy from S&P from this zone, but NAS wasn't giving me that same entry of the buy, right? And he bought, and NAS was also giving me a sell, and S&P wasn't giving, but eventually the both kind of move similar, but that doesn't mean all move in the market always happen from a point. And there's a, if you understand your entry method very much, you can even see the same trade immediately you're stopping a buy, the other one that relates to it will be giving you a sell. And if you understand what you're doing and it's exactly your pattern, if you execute, you're going to make some money. And what am I trying to explain here? You can see, well, just like I said, I was trying to buy NAS from this bottom right there. I shared the trade. I was trying to buy bottom from here, and my TP was above here. And S&P, NAS as well, didn't have that buy at that moment. Even if the buy kind of play out, well, based off where price was coming from, this was not the type of buy I would really love to take. Instead, I'm going to take the S&P buy because of where price is coming from below down here like this, right? So if price is coming from down here, I have something to trade off from here. More like or less like Nas didn't have that where price is coming from, so I'm not going to risk it. So I was just patient and I took the S&P which bought, and Nas didn't bought, but you can it didn't give me that my entry method, but you can see it eventually bought from there as well. And you can see even at the fact that I was still not seeing a sell on S&P, and even if I want to sell S&P, I must make sure I want to have a reaction from here before having a new crate of a sell for me to take a sell within here, right? Then look at what Nas did. Nas get was formed the sell pattern when S&P and NAS was totally expecting to buy, and you can see that when market got to this point, it sold even without tapping me because I was trying to make sure that it took out in this last high that I was seeing here, but the trade moved on a massive sell, right? Because of where price is coming from, So I understand that. And using your Fibonacci, let's go straight with NAS first. The Fibonacci, if you flip from this low to this high, you can see your liquidity is so at the 50% of your Fibonacci level, right? So correct for you to use to always take your trade. These are trades that played out that I'm showing you how they played out. And if I keep going back to history, you keep going to see same thing just like they are playing out. Just like here, I also got this S&P. I've forgotten if it's S&P or NAS, but their entry always play out the same. But one of it, I got the entry like this. I think it's S&P. I think it's this S&P and Fibonacci from this low to this high is given this liquidity very close to the 50%, right? Exactly, just like that, you can use your Fibonacci very correctly and be able to spot your liquidity on the right zone for you to make sure you wait for market to come take it out for you to start looking for a buy or a sell. If you need more example, we're going to go in and you can see I've already given you one trade breakdown for me for next week. I've shown you AUD USD, more like more other pairs you can see on my watch list because I always back test a lot. I have a lot of back tests of the trade that I want to take. And ADJPY, there's nothing on ADJPY yet. This AUD card you can see as well. Look at that Fibonacci level. Look at that Fibonacci level giving me that a specific liquidity should be very close to my 50%, very close or very close like this, or sitting on top of the 50% or beneath it like this, and I'm going to use it as my liquidity and execute my trade. And remember, just Fibonacci doesn't guarantee you to take a trade. You always want to make sure you understand where price is coming from. So where that price is coming from determine your current entry, your current swing high and swing low for you to first get your algo, make sure there's a liquidity, then you take your Fibonacci to make sure it aligns with your liquidity. And when it aligns, your next thing is to execute, right? And then see it play out. And there's another example. Look at this Euro JPY example. If you flip from this high to this low right there, you can see that this liquidity is so at the 50%, right? You zoom in, it's so clear. You can see the sell happened. Just same as the buy that also happened there as well. If you flip from this low to this high, even this high, even this high is already giving you this guy right there. And if you give it this high, it's already on the 50%. You can see how market came to take it out and start buying from there. Just like that. Is this another example? Exactly. This is another example. What did I even mark out here? Is this a trade? This carrying, I don't understand this. Okay, I think it was going like this for on the norms. I think I was just studying to mark out this because I'm not going to take a trade that I've no. So I'm not going to use that as an example, even if it's too clean. But let me show you guys. It's just same thing. It's just happening all the time in the market. This is it, and you can see this 50% was so close, and if you execute, you're going to make some money out from it, guys. You can see same thing as well here. You use the Fibonacci from the low to the high. You can see, look at the last high. You always get your liquidity 50% above it a bit or beneath it a little. Just like that, you get a perfect trade and you execute. I hope you learned something from this Fibonacci video that we did here today. And just like I said, I'm going to show you my Fibonacci setting. Go just like this. I have the 1%, 0.5, and 0. And if you go to my setting, guys, don't forget to subscribe, like my videos, give me that thumbs up, comment for me, show me that what I'm doing is also valuable to you. This is the setting of my Fibonacci. You can see the first one is on 0. I only have this one to 3 tick, and this one is 1, this one is 0.5. The rest is switched, is off, and you don't need any other thing right there. If you have a wrong setting, you can set your own correct so that it will look exactly just like my own. No more other setting, just this. The coordinates, nothing to be there. This one, nothing to be there, just like that. You have your good Fibonacci entry set, right? So that is it, guys. That is it about Fibonacci. I hope you learned something. Thank you guys for watching and peace out.